Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor Barri Griffiths. Now, we're lucky enough to be joined for part 2 by Chad Griffiths. And Chad is an industrial broker and real estate investor. And we had a fantastic chat in part 1 of this and just covered a lot of the stuff in industrial. So if you haven't listened to that, please go back and listen to that because there was so much great information on there, not just on industrial, but just in general on investment outlooks in general. And I really enjoyed that first conversation. I'm excited about part 2. So Chad, welcome back to part 2.
Yeah, I'm so glad to be back here, Barry. Those were fantastic questions in the first round, and I'm looking forward to round 2.
Yeah, absolutely. So maybe, we have a main focus on multifamily on the channel. We have people from all different investment classes, but have a multifamily investment specific to some degree. So maybe if you can start out, because hopefully a lot of people have listened to the first one, so I have a general idea about industrial and whatnot. If you compare multifamily to industrial, what are the similarities and maybe what are the big differences between the two?
Yeah, and perfect spot to pick up from, because there are definitely similarities, as we talked about in the first episode there. Just like everybody needs a place to live, the global supply chain and just commerce in general needs warehousing as part of the infrastructure, whether it's a manufacturing facility where the things are physically made, or whether it's a warehouse where these things come into it, get sorted, and then get shipped out. That's just a necessary step in the supply chain of getting things from being made all the way to our door. So unlike office, and I think office is a really apt example right now, because over the past 18 months, we've seen people trickle back to the office. But I think one thing that is clear is that people can at least temporarily work from home. It's still split. I think there's still some people that want to go back to the office. There's still some people that are hoping that they never go back to the office. But the world didn't shut down when office workers were working out of their house, whereas industrial kept going throughout all of this because it's a necessary step in everything. Getting food to our doors, that's going to go through a warehouse before it gets to the supermarket, before it gets to your door. Shirts, clothing, everything that we use and consume. And we talked about in our last episode, I'm the same with you. We've ordered so much stuff as a family over the past 18 months. That's all going through a warehouse. So I think that's probably the biggest similarity, is that the multifamily and industrial, with the exception of March and to June of 2020, has actually fared quite well over the past year and a half. And in multifamily and industrial are both in that same camp. But on the other hand, I also think it's worth emphasizing that there are some stark differences. And perhaps the biggest one is that not every industrial property is going to be the same. In fact, even finding two industrial properties that are even remotely similar is going to be challenging, because they're all going to have some difference between them, even if just how the property is situated on the site. Perhaps one has more loading area, so trucks have an easier time backing up to, so they can get to the property. Perhaps one has higher ceiling heights, or one has higher power. There's always going to be some difference between industrial properties. And that's where there's both opportunity and there's also pitfalls. It's a pitfall if you buy a property that has competitive disadvantages. So if you buy a property that has lower ceiling heights, or it has poor marshalling area for these trucks to get into it, then you run the risk of having a property that won't get the same amount of rent as a comparable property that doesn't have those deficiencies. And on the other hand, if you find a property that has more amenities, and we talked about cranes as an example in the last episode, if you have a property that has cranes and there's a company that needs to have cranes, your property might be able to attract a premium. So there's opportunities, and there's also huge risks in industrial real estate. And I think it's incumbent on any investor, whether it's a small investor all the way up to the largest institutional investor like Prologis, to know fully what they're buying, and that includes all the strengths and the weaknesses.
Yeah, good point. And I think something else that's probably different, quite different, is the leases, right? Usually in multifamily, it's a year lease. Sometimes they then go to month, but I'm sure in industrial, the leases are a lot different to multifamily. Can you elaborate a little bit on a lot of times what leases look like? I'm sure that, it's different. As you mentioned, every property is almost different, but there's got to be a generality and kind of, a broader outlook of what the leases are in industrial.
Yeah, they're different, and I think that that's what actually makes industrial real estate attractive in comparison, and that's also why people are prepared to take a little bit more risk with industrial. So unlike residential, which will typically be a year-to-year lease, might even be month-to-month or 6 months, it'd be pretty uncommon, at least in my market anyways, to see something beyond a 1-year lease in residential, where in industrial real estate, it's common to actually see 5 or 10-year leases. And sometimes you might even see a 15 or 20-year lease. So when you look at it from a management position, you might have a tenant that's in there for decades versus the turnover that can come in a residential unit. And I know that there's some great residential tenants out there that stay for a long period of time as well. But for the most part, you're going to have a lot more turnover in a residential lease. And then a residential lease will also typically be constructed as a gross lease. So the tenant will pay some amount, maybe it's $1,500 a month, and that includes their property taxes. That might include the insurance, that might include the management fee that the owner would charge. It's a gross lease. Whereas in industrial real estate and commercial real estate in general, most tenants will pay a base rate, it's also sometimes called a net rent. And then in addition to that, they'll also pay for all the proportionate costs to operate the building, which is called operating costs or additional rent. So how it might look is that a tenant will pay X amount in base rent or net rent, and then they'll also pay another amount for their operating costs or additional rent. And those numbers will actually fluctuate over time. So if an owner of an industrial property does a 10-year lease, that net rent will be pre-negotiated ahead of time. So it could be flat, it could be, call it $10 a square foot, or there could be yearly escalations in there. So maybe it gets to $14 a square foot by the end of year 10, but that number is predetermined ahead of time. The operating costs will almost float. So the owner will give a budget at the beginning of the year and say, this is how much we expect the operating costs to be. So again, property taxes, building insurance, common area maintenance, management fees. You don't have snow removal in Florida. We have snow removal in my market, or landscaping. Those costs are just what's responsible to keep that building operational. Those numbers will then be reconciled at the end of the year so that if property taxes go up or if landscaping happened to be more expensive than they thought, the landlord will either invoice the tenant for the difference, or they'll give them a credit back if they collected too much. And the beauty of that is that you know what your net rent is over the entire lifespan of your lease agreement. And compare that to residential, especially if you've got areas where there's rent control or it's just difficult getting those increases. Industrial real estate, you can flow those expenses back through to the tenant. And again, it's region specific. I don't want to say that every lease is like that, but the majority of leases that I've been involved in are those traditional net, sometimes called triple net leases. But you want to check your lease agreement. I'd say that as a caveat is check your lease agreement. Don't just assume what I'm saying that works in my market is going to be applicable across every market. But for the most part, the vast majority of leases that I've looked at are structured that way. And for good sense, if you did a 10-year lease with a tenant and property taxes rose at 10% a year, you'd slowly erode the amount that you're collecting from the tenant. So I think that that's one of the main reasons that people go to commercial real estate is that you have long-term tenants. You're typically going to have a lot better of a tenant because you've got a commercial corporation behind the lease. So you're going to have more security that the lease is going to get paid. You're going to have them for a longer period of time, and you're recapturing any of the expenses that you have to pay for it. And then to make it even more compelling, you could even have an outside manager manage that property and charge the management fee back to the tenant. So that's one of the huge benefits of commercial real estate investing that gets overlooked by people in residential, but it comes back to that familiarity. If someone's familiar with residential, and we all have some familiarity with it, then that's just an area of comfort for them. But if you are able to take a little bit of risk and learn intimately about commercial real estate, and I stress that as well, it's not just enough to read a book on it and think that that's enough. It is a journey. But if you're prepared to go on that journey, take a little bit of risk, not only are you going to be faced with having an asset where you've got long-term tenants on flow-through leases with professional management paid by the tenant, you're also typically going to earn better returns. And we talked about it in the last episode. In my market anyways, residential multifamily cap rates are about 4%. Industrial cap rates are in the 7% range. So you have an opportunity to make a much better return, better tenants, actively managed, none of the hassles about toilets and all the hassles that come with multifamily, and you're going to make a better return for it. So you can start seeing where there's a huge uptick for it, but it also comes with a lot more risk, and it also comes with a lot more upfront time spent in gathering that knowledge.
Yeah, very interesting, man. And with tenants as well, how do you screen the tenants? So if you're looking for a tenant, or if you have a tenant already and you're trying to screen if they're a good tenant, what does the screening process look like?
Yeah, at a bare minimum, I'd want to see a couple of years of financial statements. And I might even want to see a reference, just who their past landlord was, just to call and see if there were any problems during that tenancy. And some landlords might even go further. They might do corporate credit checks. They might have their lawyer pull searches to see if there's any outstanding lawsuits. They might call their banker. They might call their lawyer. It depends on a few factors. And what I've noticed over time is that the more the landlord has to spend on the property, the more scrutiny they're ultimately going to have. If a tenant comes in and they're going to take the property as is, or very little amount of money, the landlord might be fine just looking at financial statements. Whereas if the tenant is asking the landlord to spend $1 million on renovations, and maybe they want a whole bunch of things done to the property, and it's going to cost a lot, well, then in that point, the landlord is going to treat it almost the same way that a bank would, and they'd want to go through the same underwriting process of ensuring the company is capable of making those payments. So it depends on the scope of work that's being done. Everyone's going to be different, but I'd say it almost always starts with just seeing a couple of years of financial statements.
Is there companies out there that can do the screening process for you, or do you have to fully understand that yourself as the owner? Because obviously there's a lot that goes into it. I was wondering maybe if there's companies out there that do that for you.
Yeah, there probably is. I've never looked into it myself for the sole purpose that I think that should be a hands-on process. And it doesn't need to be undertaken just by the landlord themselves. It could be having their broker involved, like a guy like me in their market, having their accountant weigh in on it, having their lawyer weigh in on it. I'm a big believer in this industry that you need a team, and that goes from sourcing properties, acquiring properties, managing them, leasing them. I think having a team is just so powerful in this business. And I wouldn't want to delegate that responsibility away, and I wouldn't recommend other people do it either, from the standpoint that having that knowledge is pretty important. Like, you could be getting into a relationship with that tenant for 5 or 10 years. I was like, there's marriages that don't last that long. So like, I think it's pretty important to really audit those and understand it yourself. And even if someone doesn't have a really good grasp on financial statements, that's something that you could sit down with an accountant and have them really explain to you at a high level. Here's the amount of money that they have in their bank account. Here's what their cash flow is. Here's what their burn rate is. Here's their expenses. I think that these guys would have the ability to pay this rent based on projections. Those are like high level talking points that an accountant can break down without having to get into the nitty gritty of every line item on the financial statements. But to your question, there might be companies that offer to do it. I just think having your team, your local team, involved in that granular decision right from the beginning is really important.
Yeah, it's true. And it's like you said, having that team is just so critical with anything. And same in multifamily. If you don't have a team, you're going to be struggling, because it's so much that goes into it, and you need different eyes, different expertise, and just building that team is so critical. And on that point, if someone was looking, a broker, I think, is a great place to start building your team, right? If you find a good broker, do you have any suggestions or recommendations how people can find a broker? If you're looking for a broker, how would you find one, and find a good one at that?
Yeah, I mean, one overarching theme that I'd have is hire slowly but fire quickly. So be very diligent in finding the right broker, and it might just be asking for recommendations or referrals from people that you know. If you have a lawyer already in the market, most lawyers are going to have a broker or two that they know, or accountant. I would start there by just looking for referrals, and then just be very diligent on it. Just go through the process of getting to know who that broker is and understanding how they view the process. Myself, I'm a very patient broker, perhaps even to a fault, where I've said to investors before, it could take me a year or two before I find a property for you, where they're anxious to get going and they don't want to hear that. They want to buy something this calendar year. They want to go quickly. I'm a very patient one, where I'd rather someone buy a property that they're happy with as opposed to just finding something quickly. And that works well. That resonates with certain investors, where they're like, I want a guy that's working on my behalf and he'll fight for me. But some guys are saying, I understand this market really well myself, and I really just need you to source deals for me, and then I'll do all the evaluation myself and I'll determine if it's right for me. And you're going to have different personalities all along there. For that guy, I might not be the best fit, just because I'm a lot more patient. I want to scrutinize a lot more properties. They just might want to look at everything that comes up and then throw 100 darts at the wall and see what sticks, kind of thing, right? So I think you need to find somebody that's going to be a good fit for who you are and be aligned with your investment goals, as opposed to just having someone that's going to start sending you properties and you're just going to run with it. I think it's kind of like an interview process, no different than if you were running a company and you're going to hire somebody integral to your team. You're going to make sure that you're patient and cautious with who you hire. I think it's no different with your broker, nor is it any different with your accountant or your lawyer, really, right? You want to have someone that's aligned with your goals and is going to work with you in that collective goal of achieving it. So I would start by getting referrals, get some recommendations. You could always just reach out to a few brokers, call someone that you see active in the market. If you see some guy that's got or girl, there's awesome women brokers in this business as well. If you see someone that has their name on a number of signs, or maybe they're on LinkedIn and they're talking about deals that they just did, reach out to them. I'm considering investing in industrial real estate. Just wondering if I could take a few minutes of your time to see if we could be a good fit together. I think that's like a really, really good way to get a relationship off the ground. And to that earlier comment, hire slowly but fire quickly. If someone agrees to work with you and they're not being helpful, they're not sending properties as fast as you like, or they're terrible at communication, or you just can't get a hold of them, well, then just move on. I think it's much better to cut losses at the beginning and find someone that is passionate about working for you, as opposed to just finding the first person that you come across.
Yeah, that's so true. You don't want to drag it out, because it's just going to make it more painful for everyone in the long run. For people who want to get educated in this space, starting out, you mentioned it, I don't know if it was in this one or the other podcast, but I think you're the only YouTube channel talking about industrial investment, right? There's not a ton of information out there. For someone who wants to get started and wants to get educated, what's the best way for them to do that? One, your podcast, so please mention your podcast here, but if there's some other resources as well you suggest.
Yeah. Thanks for that, because I really am trying to build out a lot of content on my YouTube channel to fill that gap. When I started in 2005 in this business, there was very little, like in the terms of books or magazines, like videos, there was nothing. There's no podcast at the time, and it hasn't changed a whole lot. So I'm really trying to build that out. And I've talked about a number of different videos, so someone can check that out on my YouTube. I think I've got 60 videos or so on there now. There's another guy, Tyler Cobble, out of Nashville, who's putting out a lot of more generic commercial real estate content. He's coming at it from an investor mindset, but he's done a couple of great industrial videos as well. And then a book that just came out by a guy named Justin Smith out of California. He's with a brokerage called Lee and Associates, and he's the real deal. Like, he is a bona fide superstar broker who wrote a book. He wrote it from the tenant perspective. So it's, being a tenant broker, these are what I'd say to companies that are trying to lease space. So it doesn't tell the full story, because it doesn't come at it necessarily from like an investment standpoint or from a landlord or a seller standpoint. But what it does really well is it speaks to tenants looking to lease space. And like we mentioned in the last podcast or last interview, is that industrial real estate is only worth what a tenant's willing to pay for it. So you really need to understand that tenant mindset on what they're looking for in a property. And the book is called Industrial Intelligence. I read the book, and then I reached out to Justin because I thought it was a fantastic book, and I did an interview with him as well. So that interview's on my channel, but I've recommended that book probably a dozen plus times to people that are just trying to get their foot in the door, because it gives a very good overview of industrial real estate from the tenant standpoint. And then the other ones that I also like to recommend is to just start getting tapped into the different news sites. So globestreet.com, globest.com is a really good one. You can sign up for a free profile. There's an industrial section where people can get email news delivered right to their email. It's free, doesn't cost anything. I read that one weekly. Fantastic resource for free. And then I'd start looking at some of the industry associations. So one is NAIOP, NAIOP.org. It used to stand for the National Association of Industrial and Office Properties, I believe. They've abandoned that name though, and they kept the acronym as their name, but it's just a Commercial Real Estate Development Association now. And they put out a ton of quality industrial real estate content. So just those two news sources alone, and you can be a member of NAIOP, or you can just read some of their material. Those two news resources, as well as starting with a book like Justin's, or just watching some videos on it, would give you a really good start. But I'd emphasize it's a start. It is a long journey before I think anyone should feel really comfortable getting into it, because they'll give an overview of industrial real estate, but you still need to get really deep into understanding the metrics of your individual market that you're considering. And we talked about that too, whether that's like the market in your own backyard, or whether it's one that you're just really passionate about. You need to understand that market really well too. And that's an ongoing thing. Like I spend hours every week just studying my own individual market. So there's information you have to learn at the beginning, but you also need to recognize that it will be an ongoing process forever.
Yeah, just like everything, right? It's just a continuous evolution with everything. You've got to keep educating yourself, otherwise you just get left behind. Would you say for people starting out, is it better if they, you have manufacturing, you have warehouses, you have the flex space, is it better for them to pick one of those and really niche down into that? Or is that are you pigeonholing yourself too much then, you think?
Fantastic question. And I think every investor will have a different degree of comfort with it. You can get smaller manufacturing properties where you might be able to buy like an industrial condo. First property I ever bought was a 2,000 square foot industrial condo. And those are catered more to manufacturing. Whereas the logistics centers, you might be looking at like a $10-20 million project to get those. And you're not going to see a lot of those small ones. So I think it'll largely come down to appetite on how much money that they want to invest. But I would say that you need to be a student of industrial real estate as a whole. So you need to know every single property that you're considering. What does it cater to? Is it a property that caters to the logistics industry? Does it cater to manufacturing? Is it more of a flex property? And you need to have a really thorough understanding of who the end user is going to be for that space. So there can be some overlap. You might be able to find a flex property that works for manufacturing, or flex property that works for warehousing. But I would just make sure that any property that you look at in any one of those subcategories is just it's going to have appeal to either a tenant or a buyer down the road. And so long as you do that, I don't know if someone necessarily needs to get so lasered focused that they only invest in warehousing or manufacturing, because I think once you have a solid industrial real estate knowledge, I think you'd feel a lot more comfortable looking at all of them.
Great answer, because it's important to know that, right? You want to understand whether you want to niche down, or if it's if you have the general understanding of industrial, that you can cover all of that. So that's cool. Well, Chad, man, thank you so much. It's been a great 2-part interview. I've really enjoyed it. There's been so much good information. I had so many more questions I could have asked you, but you've been a wealth of knowledge, and I really appreciate you taking the time, man, because this has just been a pleasure to get to know you, chat with you, and also listen to all your fantastic answers. So I really appreciate you making the time. But before we go, can you plug your YouTube channel again, and anything else you have to plug, and along with maybe your email, and however your LinkedIn, how people can get in touch with you?
Yeah. So my YouTube channel, Chad Griffiths CRE. My email, griffithscre@gmail.com. I'm very active on LinkedIn as well. I probably go on LinkedIn once a day. So that's a good place to check out. And yeah, I know those would probably be the main ones. But to your point earlier, thank you for this. Like, I really do value getting the opportunity to hear awesome podcast hosts like you do this, because I could tell your questions were so thoughtful, and you're trying to extract information that'd be valuable to your audience. So I really commend you for just like an awesome job that you're doing as a podcast host. That was a fantastic interview. I really did enjoy that.
Oh, well, thank you for the compliment. I really appreciate it. It means a lot. It means a lot. Yeah, it's a lot of work, as you know, put it in, but it's all worth it. And it's, you know, it's pleasure is in meeting people like yourself and just learning so much from just talking to smarter people like yourself. So than me, not yourself, other people than me. So it's been a real pleasure. So thank you so much, man, and have a great rest of your day up there.
Yeah, you too, Barry, and let's keep in touch.
Absolutely.